Hey everyone, have you seen what's happening with Avance Technologies today? The chart is screaming 100% sell volume. I mean, that's the kind of number that makes your stomach drop, right? Makes you want to hit that sell button immediately. But what's really going on here?
So, you're probably asking the same questions I am. Is everybody just dumping their shares? Is this thing about to crash and burn? Well, today we're going to decode that scary-looking number and figure out if it's a genuine red flag or if it's just a bit of market noise. All right, first things first, let's bust this myth wide open. You see, what an exchange's computer system sees as 100% sell volume is totally different from what we as humans think it means. They are not the same thing, not even close.
Okay, so you're probably thinking, wait a minute, how could it be 100% sell? Don't you need a buyer for every seller? And you're absolutely right. It all comes down to how the exchange's algorithm labels the trade. If a trade happens at or really close to the bid price, that's the price buyers are willing to pay, the system just stamps it as a sell-side trade. It's just a technical label, that's it. It's not a panic button. And this slide just lays it out perfectly, doesn't it? On one side, you've got our gut reaction. Oh my gosh, it's a massive panic sell-off. The company's collapsing. But the reality? It's just a technical reading. All it really means is that sellers were a bit more aggressive than the buyers, pushing the trades to happen closer to what buyers were willing to pay. It signals an imbalance, for sure, but not necessarily a crisis. Okay, so now that we've got that technical stuff out of the way, let's zoom in on the company itself, Avance Technologies. Because, to really get why we're seeing this sell volume today, you have to understand the absolutely massive run this stock has been on. And wow, here is the context you absolutely need. This stock has just exploded. We're talking a gain of nearly 400% in just 4 months. I mean, after a rally that insane, a little bit of profit-taking isn't just possible, it's practically guaranteed, right? So let's take a quick look under the hood. The company's vitals, they paint a really interesting picture. On the one hand, it's completely debt-free. That's fantastic. But on the other hand, you've got this sky-high PE ratio of 127. That kind of suggests the stock price might be getting way ahead of itself. And then there's that promoter holding, just 0.68%. That's really low. And don't worry, we're definitely going to come back to that. All right, so if it's not a massive panic, then why is the system flagging 100% sell volume today? What's so special about today? Well, the truth is, it's not just one thing. It's actually a combination of a whole bunch of factors all hitting at the exact same time. It's basically a perfect storm. Number one, you've got the obvious, profit booking. People are cashing in after that 4x run. Makes sense. Two, it's a microcap, so liquidity is low. That means even a few small sell orders can look huge. Three, that creates the order imbalance we were just talking about. Then you sprinkle in some fear about new shares being issued, a little algorithmic trading, and the fact that the rally was just naturally losing some steam, and bam, you get the perfect recipe for that 100% sell label.
Okay, so that's the why behind the number. But what about the company itself? Is Avance fundamentally a strong business? Well, this is where things get really interesting, because you've got some really solid strengths clashing head-on with some pretty major risks. So on the good side, a zero-debt company, consistently profitable, and it's been around since 1985. That's a solid track record. But the risk side is no joke. That PE of 127 is massive. There's the risk of new shares watering down your stake, and of course, it's a microcap, so it's going to be volatile. And we keep coming back to that super low promoter stake.
Yeah, let's really zoom in on that promoter holding for a second. 0.68%. I mean, that is just exceptionally low. For a lot of investors, that's a huge red flag. It basically suggests that the insiders, the people who started the company, have very little of their own money in it. They don't have much skin in the game, as they say. And that's something you really have to think about before you put your skin in the game.
So, all of this brings us to the million-dollar question, or I guess in this case, the 3 rupee question. What does this all mean for the stock price right now? Is this thing about to just fall off a cliff?
Well, from everything we're seeing, the most likely scenario here is not a collapse. It's more of a cool down. Yeah, that's the right word. Think about it like a sprinter who just ran a 100-meter dash. They can't just keep going. They have to slow down, catch their breath. This is classic behavior for a micro-cap stock. A massive run-up, and then a little pause to consolidate.
So here's what you need to watch. These are the key levels. As long as the price stays above that 2 rupee 90 paisa mark, the overall uptrend is still in play. But if it dips below 250, that's a signal that we might be entering a bit of a deeper correction. So there you go. That's a pretty clear roadmap of what to look out for.
Okay, so whether you're holding this stock or just watching it, what should you be looking for next? Here are 4 key things to put on your watch list right now. First, keep an eye out for any big bulk or block deals. You want to know if any big players are sneaking out the back door. Second, watch the official exchange filings. Is there any real news about them issuing new shares? Third, look at how the price and volume are acting together. If you see high volume but the price is staying stable, that can actually be a pretty healthy sign. And last but not least, keep your eyes glued to that 250 support level. That's your key safety zone for now. So let's wrap this all up. The big takeaway, the most important thing to remember, is that this scary 100% sell volume number is not the panic signal you might think it is. It's really just a technical quirk, a result of a stock taking a much-needed breather after an absolutely incredible run. And honestly, this quote from the analysis we looked at just says it all perfectly. This is not a panic sell-off. It's just a reflection of those technical imbalances we talked about and totally normal profit-taking after a huge rally. The key thing is, for now, the underlying uptrend is still there. So I really hope that clears things up on Avance Technologies. The lesson here is to always, always look past the scary headline numbers and dig into what's happening underneath. Now I want to hear from you. Drop a comment below and let me know which stock has a weird volume pattern that you want us to break down next. Thanks for tuning in.